How's it going, folks? This is your boy Kima. Now, I've been gone for a little while, but as you probably have guessed by the news, that there have been some things that's been happening in the crypto world and then in the investment world. And so it's my duty to give due diligence to all those and translate that to a language that everybody can understand. So in the next couple of minutes, I'm going to do just that. Stay tuned. How you doing, folks? And for those of you who are tuning in, welcome to the Kima Zone. I am your host, Kima, and today I'm going to talk about a variety of subjects in order to enhance your investment and your crypto investment world. Okay, it's been a little while since I've actually did a video, so I want to welcome you back. And also, I want you to, while I got a second, go ahead and uh, click the share button, click the subscribe button, and click the bell button so that whenever I release another video, you'll be able to get an alert and to let you know that the Kima Zone is on the air. I also plan on doing a couple of lives depending on the news of the day. And first, if you haven't tuned in for a little while, I want you to kind of sit back and relax because this channel and this program is basically to enhance the investment and crypto knowledge of the watcher. Okay. The reason why I started this show is because, I wanted to invest into my future. Okay. I don't want to be drawn into uh, the regular investments like stocks, bonds, uh, hedge funds, uh, real estate. There's a lot of different investments that you can uh, participate in. But what I wanted to do was make the future now because cryptocurrency is going to be the future of the financial sector. Okay. Many folks are actually not believing that crypto is going to be our way in the future of doing transactions, but I am a believer. Okay. If you've ever watched Bitcoin, that's just one example of a cryptocurrency. And I've done earlier videos to where I would tell you about what cryptocurrency is. And as well as I'm building a class so that I can explain what cryptocurrency is and get people better educated when it comes to those kind of transactions. But anyway, if you've ever watched Bitcoin for a particular amount of time, you know that Bitcoin has made some millionaires. Okay. I'm not going to sugarcoat it. It's just a fact. Bitcoin has made some of the richest people on this planet. And uh, why not everybody get a small piece of the pie? Okay. Why can um, only a few people utilize this golden opportunity that has been presented to us? And I just want to make it clear that when you jump into that kind of an investment, that you go in fully equipped to make any educated decision that is warranted so you can benefit off of this space. Also, if you want to read a couple more articles that I've written about crypto and about investing in general, then I will post those in the uh, comments below, and that is thekimazone.com. I have made a website to educate as well as to inform that if you want to learn more and get in depth about cryptocurrency and investing in general, I have written blog articles. Uh, they're short reads and they're designed basically to keep you informed and to educate so that you can, you can invest and you can live those happy, healthy lives of people who are thriving in the cryptocurrency space. So if you have a moment, go and subscribe to the site, and that is www.thekimazone.com. And just go ahead and hook up with that. So um, I'm going to go ahead, and there are a couple of things in the crypto space that I really want to touch on. There's been a lot that's been happening so far, and I'm not going to take too much of your time because I know if you're in the middle of a work day, which I am, I'm in my office now, and you have a lot to do. We live busy lives here in America and throughout the world. We have to provide for our families. We have to do the jobs that we've been hired for. And so I don't want to take too much time in, informing, but I do want to give you a couple of tidbits so that it gets your mind kind of wondering what's going on, you know. So I was cruising the news, and the first thing that I found, and you'll see me looking away from the screen a little bit because I have notes. I'm up there in age, so thereby my memory kind of a little bit that short. But uh, I will say, I get news articles delivered to my email constantly, and one of the things I love to do is to look at the news articles to see exactly what they're talking about. And so I look, and I get a email blast from a company called TLDR. They deal mostly in artificial intelligence, but they do have news articles about crypto. And one article kind of caught my eye here, and the headline reads, and I'm going to turn my head just so I can read it. It says White House blasts digital assets in new report, sees little value in crypto, or improved financial inclusion, and question the role of regulation in protecting stakeholders. Hmm. The report also expressed skepticism about stablecoins and really any sort of distributed ledger technology, meaning blockchain, while highlighting the risks associated with DeFi applications. Okay, now that's just part of it. And I recommend that you search this article online if you want the whole story. But I just want to take a couple of minutes to give you my take on this whole thing, on this article. Now, the first thing it mentioned is that it didn't fulfill its promises. Now, anyone who's been a student of cryptocurrency knows that the primary reason that cryptocurrency is existing is so that you could decentralize the financial system, meaning that you don't have one body to control the financial applications of everybody. Okay, right now, central banks control pretty much cash flow, and they actually control uh, transactions for everyone. Okay, you can't make a move without the central bank knowing about it. Okay, if the central bank wanted to control, wanted to change anything about any kind of economy, you see what the Fed does to us. They raise the interest rates, things change. Raising interest rates, your carton of milk becomes more expensive. A carton of eggs becomes more expensive. Fuel for your car becomes more expensive. So the centralized bank, aka the Fed, here in America, can control the economy just by raising the interest rate a fraction of a point, and they can cause all type of havoc. And so the thing about cryptocurrency is How can you do a reasonable transaction without paying a third party to do said transaction, as well as no fees for doing said transaction, and you don't have anybody trying to control or muck up the works if something's working? Okay. So now I think they did that because, put it this way, there are some companies that actually take Bitcoin as a form of payment. Okay. So what happens if you pay with Bitcoin? You don't have an interest rate. You don't have a tax. You don't have anyone trying to control how much you could charge and how much you have to pay with Bitcoin. Because guess what? It's unregulated. Thereby, the two parties involved in the transaction control the transaction, not anybody else. So I think that they fulfilled the promise that it was designed to do. And the government has a problem with the fact that they can't control it because they can't control cryptocurrency. It is not a taxable income until, and for all y'all new investors, this is a teachable moment. They can't tax your transaction until you turn something from cryptocurrency to what is called fiat, the dollar. Okay. Once you turn that transaction from crypto to a dollar, they can tax you. That is income. That is called capital gains. And guess what? It can be anywhere from 40 to above percent of the transaction, depending on how long you've had that crypto. So I would definitely get with your tax professional to get the particulars, but it is a fact and it is a thing. And oh, before I forget, this is not financial advice. This is only to entertain and educate. So I have to put that out before somebody in my comments goes, "Oh, you're trying to tell us what to do, and you gave us the financial advice. So if I lose blah, blah, blah dollars, then it's your fault." No, do your due diligence. Okay. That's what I'm trying to push out here. Do your due diligence. That way you don't get taken and you can't say I didn't know. Okay. Um, I've been at this for a number of years and I've fallen on my face a couple of times when it comes to transactions in cryptocurrency. Okay, because it's still new, it's still changing. It is water. Okay, it's not just going to flow one way, it flows a couple different ways. And one of the reasons why I do this show is so that I inform you of the change in direction. And right now, the change in direction is governments and banks do not like crypto. Why? Because they have no control over it. It's almost like trying to control a wild Mustang that's powerful and strong and fast. And it keeps breaking every rope that you lasso around it. Okay. It wants to be free. It wants to do what it wants to do and what it was designed to do. And that's the same as crypto. Crypto is going to do what it's going to be designed to do. And the government and banks don't like the fact that they can't control that. They can't regulate that. Because when you regulate something, usually it causes a whole bunch of chaos and a whole bunch of problems. There, but look at the climate now. The SEC is causing havoc. Okay, the Securities and Exchanges Commission is causing huge havoc just by going after these crypto companies and exchanges. They are just by asking the question of, is it a security or is it a crypto? Okay, just by asking that question, you have seen. Look at FTX. Okay, FTX went bye bye. Okay, then you have other exchanges really shaking in their boots and looking at this case. Okay, and it's not over yet. It's still going. So keep your eyes peeled, and hopefully we'll be able to find an answer to something. But just know that the central banks, as well as governments, are not cool with crypto. That's why they're making crypto of their own. Okay. The government actually is trying to make a stable coin right now to where it's totally programmable. Can you imagine if you have a stable coin and it controls every transaction in your country, and all of a sudden your government decides that you bought too much? They can program that currency to turn off. Okay. That is major. Let's say that your household uses too much soap. I know that's ridiculous, but just follow me on this. Let's say you spend one stable token on a bar of soap. Okay. All of a sudden, you get up to 20 bars of soap, and the government decides, hmm, he's buying too much soap. We're going to turn him off. Now, here's the couple of problems I see with that. One, the government makes a stable coin that is totally trackable. They know exactly what you spend it on. They can look and see how much you buy at a given moment. Then they can decide if you bought too much and turn it off. Are you following me on this? This is the governments overseas are trying this too. Central banks overseas are trying this too. They claim, oh no, our token is not programmable. Look, anyone who is a student of tech knows that anything that is built with coding and programming can be manipulated by coding and programming. So to say that a stable token is not programmable or won't be programmable, I am going to go on record as saying this. That is a downright lie. Okay. And anybody who told you that, I gotta look, you aren't getting the Brooklyn Bridge that you are trying to sell neither, because I know that's coming next. But anyway, I want you to really think about what's coming down the pike and really kind of keeping your eyes open on what these central banks and governments are doing, because it's going to affect you in one way, shape, or form. You might as well be knowledgeable now before it hits you in the head later. Now, I mentioned it on my last segment about how the SEC is changing crypto. Now, my opinion on this, and here's my disclaimer: the opinions and facts spoken to you right now by me, Kima, is only my opinion. Okay? It is not fact. It is not, as they say, gospel. It is just my opinion. So take it as that. Okay, so to give a couple of minutes to this, the SEC has been going after a variety of different entities in the crypto world for a variety of different reasons. Whether you're trying to ask if it's a stable coin, or is it a security, or if it's following a certain rule set, or look, I'm just going to give you the skinny as a new investor. This is some stuff that scares people. Okay, this is some stuff that basically will push people away from cryptocurrency. It will. Simply because of the fact, look at what it did with FTX. Look at what happened with Ripple. Okay. Now, I throw those two examples out there for this reason. I actually did buy some of the Ripple token, okay, XRP. And I will tell you right now, when the SEC was going after Ripple, everybody was thinking that that particular token was going to die. Okay. They thought that it was pretty much going to fall. And I will tell you from firsthand experience, I looked at that token and XRP actually raised up a little bit. Okay. That was surprising considering that their parent company was in a court case. And everybody was saying, well, I think it's probably going to die. It didn't die. But you saw what happened uh, with the exchange, FTX. You saw that pretty much went bye-bye, but it wasn't because of the SEC. It was because of some mismanagement. It was because of some other factors, but it went dead. So now, whenever something is on the newscast that the SEC is looking at blah, 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 or looking at this token or looking at this entity, everybody starts shaking in their little booties. Okay. My opinion is this: why are you really tripping about how a token or how a exchange does any work? It's because, quite frankly, you have limited regulation, you have limited control, and throughout history, we've already had folks that will use fear in order to control what they want to control. And I believe that the government in general uses that in order to control entities that they can't control by normal means. Okay. So, us as beginning investors, we have to look at the big picture. Do not look at what's happening in the present. One of the things I like to talk about whenever I talk about cryptocurrency is the difference between a long term investor and a short term investor. Nothing wrong with either one. It's just different styles of investing. And just so you're educated, a short term investor is a person like a day trader, where basically they look at crypto and they do microtransactions in order to make a profit on a daily basis. Sometimes weekly, sometimes monthly, but they never really hold the crypto for very long. They wait till it raises, buy low, sell high, that sort of thing. Now, a long-term investor is more of a patient kind of long-term investor. They buy a bunch of crypto and they hold it for a particular amount of time, sometimes years. But they know that over the long run, they're going to have growth. It's kind of like investing in your retirement. You know you about to get that money at the end of 20 years of service. So you just basically invest, invest, invest until finally it's time to cash out. That's the difference between the two. Now, long term investors are usually the more patient type. They're usually looking at way more information than short term investors. Short term investors usually look at how high that crypto is going or token is going to go at a particular amount of time. They try to make sound judgment in order to get the highest profits available for that. Okay. So, in realizing those two, then you'll be able to see what kind of investor you want to be. Now, like I said, there's no real problem with either or. Okay. But I will say this: me, I'm a long term. Okay. I have the patience to look at how a crypto is going to manifest uh, when, uh, when they, when they go through their little trading cycles. So just realize that the SEC, tell you, they're not going nowhere. Securities and Trade Commission been around for years, and they've been bothering stocks and bonds for a long time. Now they have a new target. They have cryptocurrency now. So as long as you are informed, it's nothing to be afraid of. Just go ahead and make sure that you are informed and you look at the news to see exactly what's going on. So just hang tight. It's not going to be that bad. Just stay informed and make an informed decision. Okay, folks, for this segment, first of all, you probably noticed that I look a little bit differently uh, because the first part of the podcast, I actually, was looking a certain way. I've been working a little bit, so I was a little bit scruffy. But now I've been cut up a little bit and got my beard trimmed, and of course I'm wearing a different shirt and everything else. I actually taped the segments on different days, because I'm kind of busy. Everybody has their lives to live, and of course, I don't do my podcast in one setting because news is not in one setting. So what I do is, as the news comes, I tape a segment, and there you go. So that explains my change of appearance, in other words. But for this segment, I'm going to talk about tools that will make things easier for you when you are researching your cryptocurrency. And the tool I want to talk about this week is called Crypto Bubbles. And Crypto Bubbles is accessed on the internet. It is a free tool, and you go to www.cryptobubbles.net. And that is www.cryptobubbles.net. And let me tell you, I thought this was a joke. I really did, because the name. I mean, Crypto Bubbles is kind of like, wait, what in the world? And when you get to this website, the first thing you see is a bunch of bubbles with crypto symbols or crypto letters in the bubbles. Now, this may seem like a joke to certain people, and it may seem like a crazy way of looking at things, but it's actually really ingenious. Okay. Crypto Bubbles is made to where, at a glance, you will see the rise or fall of a crypto, of the top 100, or is it 50? I think it's the top 50 cryptos, um, at a glance, what they was doing in a 24 to 7 day period. And you can tell just by looking at these bubbles. If the bubble is red, then it is definitely a crypto that has fallen in value. If it is green, then it is a crypto that has raised in value. So that enables you at a glance, as I've said, to uh, see what has been going on with these cryptos. And it opens up the door to further research. So, but it tells you at a glance. You don't have to dig. You find your favorite crypto. If it is in the top 50, it'll be on the first window. It actually has a list if you scroll down to the top 100, and you'll find how it's doing. And it opens the door to where you'll click one and you can get more news and information on that crypto than you will on pretty other sites. I just like the fact that it's at a glance. I'm a visual learner myself. So it enables you to basically look at a picture and say, okay, I need to know more about that crypto. And Crypto Bubbles has been around for a little while, and they are a trusted source. How they get their information, it's various. They tap into a number of different reporting agencies for cryptos, from exchanges to uh, reporting sites like CoinMarketCap. They get a lot of information, and they make that into a viable avenue if you're checking on a crypto. So for this week, my recommendation is that you should check out www.cryptobubbles.net, and check out your favorite crypto, um, and do your due diligence before you invest in said crypto. I thought it was a joke, but it's on the money. It is actually one of the tools I personally use in order to research what kind of crypto I should invest in next, or to see how my current crypto is doing. So definitely check that out. And that is my pick for the tool of the week. Okay, folks. So I want to thank you first of all for joining me on this podcast this afternoon or evening, or whenever you're watching it. So for my final piece of opinion, I want to basically talk about some tips um, to safeguard your crypto and safeguard your accounts. And one of the things I want to talk about this week is your digital keys. Okay. Now, most people, most normal people, do not really think that their digital keys are very important. Or if they do, then they have the wrong idea, such as when it comes to your where you keep your crypto. All right, keep in mind that cryptocurrency is nothing more than a input on a ledger, okay, for transactions. But the way that you get that piece of information on the ledger or the blockchain is that you have to have two pieces of security access. One is your public key, which is basically your wallet address, where that transaction happens. When someone wants you to spend crypto on something, they need your address to basically say, I'm going to take crypto from one account and put it into another account. Okay. That is your crypto address. That is your digital public key. Okay. But what makes it secure is your private key. The transaction from one person to another does not happen unless you put in your private key to basically say, okay, I'm going to release this amount to this person so that that transaction happens. Okay, that is the important thing. You need to keep your public key one way and your private key under lock and key. Okay, because if somebody gets your private key, they have access to your crypto, and there is nothing you can do about it. Because remember, cryptocurrency is not regulated. So you talking about the wild wild west for real. And it's very important that you keep your keys under your control so that you will be able to control your cryptocurrency the way you want. Nobody else can. The government can't come in and snatch it. The you know most people off the street will not be able to go into your wallet and snatch it. So you have to really keep your private keys very, very safeguarded. Okay. And the way you do that can be a number of different ways, um, such as one, it is a rule of thumb that you do not leave your cryptocurrency on the exchange. Okay. The only reason why you leave your cryptocurrency on an exchange is if you're going to be doing transactions all the time. Okay, if you're a short-term investor, okay, that's one thing. Because here's the deal. On an exchange, your private key is on the exchange. You basically are making a public acknowledgement that you trust that exchange with your private key. Okay, that may not be the same with everything else, but in this case, you're basically giving a public acknowledgement that you trust that exchange with your private key. Now, yes, it may be password protected. Yes, it may be two authenticated protected to get on the exchange, not necessarily for your wallet. So if anything happens to that exchange, you're out of luck because you gave control to your private key to that exchange. So exchanges like FTX, all those folks, guess what? When FTX went under, their crypto went under. And it became a very big thing in order to get their crypto back. And now just recently, Binance suspended all trading and all withdrawals. And there's nothing you can do about that because guess what? Binance controls all the private keys on their exchange. So if they just want to stop the fact of you withdrawing your crypto, There's nothing you can do about it because you gave them that right. Okay. So if you control your private key, then you control where your crypto goes. And here is a tip. If you are a long term investor and you're not making any transactions for a particular amount of time, take your crypto off of the exchange and put it in a private wallet. Okay. There are many different kinds. I personally have a Tracer. Okay. It is a physical wallet that you download your private keys to, which means that your crypto goes on these private wallets as well. I also deal with Exodus. Exodus is a software wallet, which is referred to as a hot wallet. And not only do you have your private keys on your particular system, but you have what is called a uh, 12 to 21 word key, as well as a password, so that hackers will have a real tough time in getting your private keys. Because if you're not physically hooked onto the internet at that particular time, then they can't get to it. Just like with a physical wallet, your private key is not on the internet, so that they will not have access to your private key. And as long as they don't have access to your private key, then your crypto is safeguarded. Your crypto is locked up and your crypto is safe only until you decide you want to do a little bit of trading. Then you would download to your favorite exchange and you would trade as normal. Also, keep in mind that when you do any transaction, you will pay what is called the gas fee. Okay? Gas fees are transfer fees that enable you to take crypto from one source and put it on another so that you will be able to do what you want. Now, my thing is that when you do something, you have to keep in mind that you will be paying to do it. So, but that is something for another video. But what I want to talk about is keep your private keys uh, safe, whether it is written down in a number of different sources, or there are some folks that save them on their phones, which I don't recommend you do that because that is not a physical means. Data can be uh, corrupted. So definitely save your keys. Okay, finally, I want to thank everybody for tuning into the Kima Zone this week. Um, I will definitely be trying to make more videos as news comes out, but as you probably know, you never can tell too much in life. But I will be continuing my blog on a semi-daily basis. Once again, if you haven't checked it out, it is www.thekimazone.com. That is www.thekimazone.com, and you will be able to get your news and everything else. There's even a message board, so if you want to ask questions on everybody who is on the site, you can definitely ask there. That is being developed, so I need your help on that too. So if also at the end of the show, I will be posting questions and answering them as they come in. That way, we can all get educated together when we come to this new investment source. I also will be talking about many different kinds of investments as the weeks go on, whether it's real estate, stocks, bonds, mutual funds, companies. Uh, there are many different kinds of investments and many different kinds of creating wealth. So, we're going to be talking about all that. So, until next week, see you later.